service. Scott Bauer, founder of Prosper Trading Academy. You're really one of our experts on the VIX in terms of how it works mathematically, mechanically. And I'm going to pose the question to you that we often pose to our guests, which is the VIX broken?
Is it broken? No, I don't think so. And so many people talk about that because of the zero DTE options that are out there in the S&P that has kind of taken over for the VIX. But no, I don't believe it's broken. In fact, Abigail, if you look mathematically, as you were talking about, if you see a VIX right around the 16 handle, that represents about a 1% daily move in the S&P. Well, we're below 16 right now, and our average moves are below 1% per day. So no, I don't think it is broken.
Okay, I love that explanation, and it's a really good education to many of us, including myself, on the idea of volatility and what the VIX actually represents. Though, Scott, there is one investor out there. This is really incredible. I think that the VIX charts incredibly well, and I would say that it does appear to be setting up for some sort of big super spike, similar to what we saw back in 2020 and then 2015, 2016, both of which charted pretty well. There's an investor out there saying that the VIX is going to be at 180 by February of 2024. I didn't even know the VIX could go to 180. I think its last high or only high, record high, is 90. Is that possible?
So it actually could. The likelihood is probably well less than 1%. But this particular customer, this particular investor, if you will, and I've heard from the brokers and the traders down in the VIX pit that it's actually a big bank. They are more than likely buying those upside calls, and they did it in December and February expiration as well as a hedge against the portfolio, basically to cover or meet margin requirements. I'm not really sure that they expect a 180 handle on the VIX. Again, they can buy, if they wanted to, they could buy 100 calls, 90 calls, 70 calls for literally just pennies more than what they spent on this. So yes, it's one of those, dots that you see out there. It's this big trade everybody's looking at. I wouldn't make too much of it in terms of anyone's expectation of a 180 handle.
Okay, so the VIX is known as the fear index, even though I know you and Kevin Kelly at Kelly ETF told me that that's incorrect, that it should be the uncertainty index. But there's also the panic index, the skew index,
yes.
And it over the last 5 years or so, even longer, going back to the crash back in 2011, it tends to spike pretty high a month to 2 months, 3 months ahead of a big sell-off. Do you see any sign of that happening, and what do you think about the skew index?
Right now, I think the skew index is probably fairly priced. The difference between skew and VIX is looking at the money options going out 30 days in the S&P. The skew index looks at those tail options, those out of the money options, both on the upside and downside. So looking for a big black swan event. I don't necessarily think that it is really showing that right now, but always have to watch out for that.
Yeah, for sure, especially given the fact that it's retreating from a recent high, not the record high, but a spike this year. You just have to wonder if some selling of some sort of it could be ahead. Scott Bauer, founder of Prosper Trading Academy, thanks so much for joining us for Options Insight today. Great observations as always. And from New York, this is Bloomberg.